So if you've ever wondered why some people get a bigger tax return than you, it's probably because they're claiming credits that you didn't know about. I'm going to tell you about 5 credits that you probably didn't know about that's going to help you get a bigger refund. So the first one is called the Earned Income Tax Credit, and it's for people that make under 64K. The IRS will give you money back even if you don't have kids, but if you do have kids, you will get a lot more money back, just depending on how much you make and depending on how many kids you have. The next one is called Savers Credit, and the IRS will give you money back if you're saving for retirement. If you contribute to a 401k or an IRA, the IRS will give you up to $1,000 back. The next one is called the Child Tax Credit, and you can get up to $2,200 back per child, and part of it is refundable. The fourth one is called the American Opportunity Credit, and if you're in college or if you're paying tuition, you can get up to $2,500 back per student, and part of it is refundable. The last one is called Premium Tax Credit, where if you got healthcare through the marketplace, you might get extra refund money based on your income. Leave a comment and tell me which of.
So a lot of these are just basic tax credits that most people will receive. And the thing is most of the time the software just calculates it for you. So you might not actually know that you were receiving these tax credits, but you receive them anyways. So it's not something that you really need to know about per se. I mean, it's probably good to know why you're getting tax back, but you probably are already inputting the data so that you can get this tax back. And usually your tax preparers, they'll ask you questions that will kind of lead them down the road so they know what tax credits you will need. And they won't specifically ask you, what about the child tax credit? They know you've got dependents, and so therefore you probably qualify for some child tax credits, right? Some of these are not quite as helpful as you might think they are. Like the Earned Income Credit, you have to be making less than $20,000 if you don't have any kids in order for you to qualify for that. For the Child Tax Credit, of course, you need to have kids, and then also for the Savers Credit, you need to be making less than about $23,000 for that. So not quite as helpful as you might think. You kind of have to be not making a lot of money anyways. Most of the time when people get a lot of money back, it's because they didn't fill out their W-4s correctly when they first got hired onto the position that they have. They didn't put in maybe their dependents correctly, or maybe they didn't put in exactly what they needed to into that form correctly, and so therefore there is more being withheld from their taxes. And so when they file their taxes, more is paid back, right? So it's just that they've paid more, that's why they get more back. It's not necessarily a good thing. I wouldn't say that's a good thing at all. I would say you want to kind of hit around 0 to just a little bit over 0 is what I would shoot for. And that is what's going to be ideal for your taxes. Don't always listen to what you hear on social media and freak out and say, oh, maybe I don't have this one.